So hello and welcome everybody to our seminar. I still see the number of participants increasing, so I would assume we wait for. Hello, Yunus. Hi, how are you?
Thank you, and you?
So,
nice to see you.
Thanks. So we would probably wait for 2 or 3 minutes, right?
Yes.
Okay. Yeah. Okay. Very good. Okay.
Ibrahim.
Okay, so it's almost 5 minutes past half the hour. Yunus, are you satisfied with the number of participants? 45.
I guess yes, we missed.
Okay, very good, and welcome everybody from our side. This is two people involved, Alperen and myself. Alperen, would you want to quickly introduce yourself?
Yes. Hi everyone. I am Alperen Kayacan. I'm working in Simon-Kucher for 4 years as senior manager. So before my career in Simon-Kucher, I was working in Conferi, and I did many projects with in Azerbaijan market in different banks at that time. So, but the topics were mainly organizational design and human resources optimization kind of topics. And then now I'm working in Simon-Kucher, and now we are also would like to introduce ourselves and also give you a webinar regarding open banking today, and also some of our topics that we are still working on. So I'm very glad to be here. So thank you very much again to give this opportunity for us.
All right, thank you, Alperen. So my name is Benjamin Belstein. I'm in the global head function in the banking financial services practice of Simon-Kucher. We are structured in industries next to our practices, so to speak. And I did over the last 10 years many projects for retail banks and also payment companies. And what we now see is increasingly more open banking, and the APIs change a lot in the industry. That's why we are very glad we got invited by Yunus and the association to discuss with you recent developments. And with Alperen, I already worked together in Turkey, which also have a very vivid API and open banking scene. Meanwhile, you will see many examples in the presentation we will show you. So I'm looking forward to, take you on the journey, what will happen probably in the next 10 to 20 years in the banking industry, which is really interesting. And we brought a presentation I will show you right now. I hear an echo. Probably somebody needs to go on mute. Now it's gone. Very good. So probably everybody that does not speak yet could go on mute. Yeah, thanks very much for this. When you would have questions, then we have certain, islands for discussion, so to speak, and also we have some polls prepared, so there will be ample time to discuss the questions. And you can use the Zoom functions like raise a hand and stuff, right, so that we can discuss the questions when you have them. Okay, now let me probably start with the presentation right now. I'll share my screen. And that takes 1 minute because I will use a special function of Zoom, which is really cool. You will see that in a second. So yeah, that's the presentation, and hopefully you can see it now. That's the really cool feature of Zoom, right? Because you can travel now. I can travel inside and also make myself smaller and bigger, right? So that's very nice feature I found, which is also happening in technology companies usually, right? They inventing, and when we look back in the 1990s, Word and Excel, the number of features you had, right, and the functionality you have today, it massively increased, right? And this is probably also what will happen in banking, that many features, and by the way, also in the car industry, that now electrifies cars, and all these cars, they have, every generation has more features inside, right? So as a natural process of innovation, many features will also be invented in the banking industry. And this is just one example of it, right? How Zoom is innovating. Good. Okay, so then let's have a start. The agenda for today would be the following. So we do a short introduction of the company, our consulting company. We personally introduced already to you. Then we talk about the API revolution, also in the payment space. And then we move on to the open banking, meaning what impact would it have on the banking industry, all this API revolution going on. you will see many case studies from other markets, from other organizations that hopefully inspire you. So this is then also the idea for today's seminar, that you get a lot of insights into open banking and APIs that inspires you then for your own development ideas, your own development progress. And then we also hope to discuss certain points with you. We brought also questions in the presentation. We also have Zoom polls that, you know, we would ask you certain questions later on, and let's see what happens there. And obviously, when you will have questions, then it would be good if you raise a hand so we can discuss them. At the end, we have this section of questions and answers, or the wrap up. So preferably, we probably could discuss there. If you have any questions meanwhile, you could probably also then raise the hand so we can make a little break and discuss them. Good. Okay, so then let's have a start about Simon-Kucher and the top line space, so to speak. The company was founded over 30 years ago with the idea of, you know, kind of making certain specialization in the consulting world. So Hermann Simon, he was is a business professor, and now he was researching a lot about German, like medium-sized companies that are very successful on the global market. It's called hidden champions. You seldomly know them, but they are leading in the world, and they're very specialized, right? And this is also how he built this company here. Very specialized on improving pricing, improving products, right? Improving sales, all the top line topics. And this he did then on a global scale. So we are the leading consulting firm in about on this top line, so to speak, topics. That means we do not look at costs so much, right? Unless we talk about risk costs, right, for pricing in lending. But we would not optimize your headcount or whatever, right? It's really about, it's all about the making prices better, making products better, helping selling better. And this is very specialized, and we do this on a global scale. As an example, you see here Alvin from my Istanbul office that is heavily growing there, and other locations as well. So that's kind of our standpoint in the consulting world. Now, the clients we work for here is a big kind of portfolio of the clients we have in the Turkish market. Probably Alvin, you could say some words about the projects there.
Yes, thanks, Ben. So in Turkish market, actually, our office has been established in 2013, and since this time, actually, we are growing a lot. And right now, we have an Istanbul office and 60 people in Turkey right now in Istanbul. And we are working in several industries, especially we are grouping them as B2B and B2C industries. And you can see there are many like companies, maybe some of them you already could be your customers as well. And also in B2C, in banking, we especially in the recent time, we work with QNB Finansbank, especially for SME banking and digital banking there. And also we are doing a lot of projects in insurance companies. And beside this, we are working with private equities because both of our interests are mostly common in the market. And conglomerates, we are working with several conglomerates in Turkey, which are the biggest ones. You can see the logos. So, and now also not in Turkish market, actually the role of the Istanbul office is a little bit a regional responsibility. So we are also doing projects in Middle East and with the Middle East, and also the closer regions than after Middle East than Turkey. So this is the overview about what we are doing in Istanbul office.
All right, thank you very much, Alvin. As you can see, the company is advising clients across many industries, but we're also specialized in certain industries, as me myself in the banking industry. So that's why we combine the local more with the kind of industrial expertise. And when we do projects, we always work together. So the global experts with than the kind of the local consultants that understand the culture, the language and stuff. Okay, so that's for our coverage, and this is now from the banking practice, so that we have also global outreach. That's why we see many, kind of companies around the world innovating right now. Also in Africa, it's really interesting what's going on, because infrastructure in Africa is really leapfrogging sometimes even in the United States, right? Because, for instance, there are not so many credit cards and no terminals there, so that's why they use way more mobile phones for payments, for instance, right? So sometimes when a country is starting now with certain things, they leapfrog our infrastructure and go to the next generation already, right? So very interesting developments worldwide. And now in the banking space, this is kind of exemplifying, the products we know and we optimize for the retail customers, the private ones, and SME. So, I've optimized all of these products you see here, may it be mortgages, making pricing more granular, developing a certain premium mortgage, right? Or in consumer lending, optimizing the price system, and so on and so forth. Right? All these products we pretty much know of the retail banks. And then also, of course, the whole digital idea that building digital banks, also building digital products, and how they link to the existing companies and existing offers. So this is actually our the core what we do every day, optimizing these products. They are helping organizations innovate them. We also have a big private and a corporate banking practice. So when it comes down to big corporate lending or the kind of private banking questions, especially in Switzerland or United States, we also have experts there. Okay, so much for the company. Now, hopefully you understood where we stand, where we come from, what we do, and where we're specialized. Now we would start with the kind of the topics for today, which is then the first, the API revolution. And what does it mean? Why is it a revolution? Right? You could probably also say it's more an evolution. But I believe to a certain extent it is a revolution. And why? Let's look into the history. So when we look back almost 50 years ago, right, 1975, it doesn't sound like 50 years ago, but it is already almost 50 years ago. You see like companies that are still existing today, and today, like IBM or General Electric or ExxonMobil, which is an oil company. But when you look at their market capitalization, so what the stock market estimates for them as value, you see they had back then a very big tangible market capitalization. So I'm not sure, Zach, here, could you probably mute because I hear you talking. Unless you have So I'm not sure. Everyone, could you probably mute the? No. Okay. Thanks so much. Okay. So again, when you have a question, please raise your hand so we can then look at it and discuss it. So 50 years ago, in a way, 600 billion tangible, almost a bit more than 100 billion intangible, right? Now, 20 years later, 1995, which is 30 years ago, roughly, that was totally changed already, right? Because intangible was now 3 trillion and tangible is 1.5 billion. So the intangible had a much higher growth rate, intangible evaluation of companies. And also, when you look down into the list, already you see certain other companies, right? Like retail companies like Coca-Cola, which is brand value first and foremost, right? So that's interesting because these intangible assets, they grow so much faster than the tangible assets. Now, when we look today, what would you assume, right? What would have happened? And that's why it's the revolution, right? Because today, that's even more extreme. And the companies you see down, there, here, to my right, are all companies of intangible value: Apple, Alphabet, Microsoft, Amazon, Facebook. I mean, almost all internet software companies made it there, and the valuation is so much bigger than the tangible companies that disappeared from this top 5 already, right? So that's why it's a bit of a revolution we see here, while intangible is a multiple of tangible. And that's the question, why is that, right? Why is intangible so much more valuated by stock market, meaning by the expectation of future income and certain things, right? So this is at the core, and that's why when you look at oil and when you look at data, there may be certain analogies. So because you can say, if data is the new oil, then analytics is the new gold, right? Because there are certain analogies. Oil, when you have it raw, it's of little direct use, right? The same with data. When you just have raw data, zeros and ones or rods or whatever it is, raw data, little direct use. However, when you refine it, it has a lot of energy. So when you refine oil into gas or other products, then they have much more energy. Same as when you use analytics to refine data, it has much more value. So you can kind of extract much more value from this. And also when you have a just lighting up oil is producing fire but has no effect, right? So when you use the oil or the refined oil in a machine, it creates a lot of movements. And the same is true for data. When you analyze, like use the analytical products in the right way, it also have a lot of value. So there's certain similarities between oil and data, so to speak, and meaning that using the data in the right way creates a lot of value. This you saw right now at the intangible value of the market caps, but you see it also through other points. Now, all new companies you've seen there are platform companies. And what does it mean? Google is a platform company. And how does Google work? Everybody knows, I think, this Gmaps, right? Or the Google Mail services. So many people find them useful, and they use this, private customers use this Google products, meaning a lot of attention is going in there into this platform. Now, Google uses this attention, this of yours, the airtime they have with you, and then they sell it to companies. Because now when, for instance, here in Baku, the Asa Cake House wants to be prominent here in Gmaps, they need to pay something, right? Or when you search certain items in Google and they're ranked up, the small ads there, right? They need to pay something for it, right? So as users, Gmaps is free, Mail is free, but they work with monetizing the business-to-business side. You know, they make the platform so attractive for customers in order that they can monetize the B2B side, meaning the company is advertising on this platform. And that's kind of one possibility to monetize the platform. The second possibility to monetize is the direct consumer monetization, like Uber. When you look for a taxi, then you pay the service, right? It's also a platform, Uber. It's the same logic of platform effect. However, here it's not for free, meaning that the consumer needs to pay something for using this Uber service. So that's the other possibility. You directly charge for your clients. And banking is, when you think of banking, it's also in a way a platform. Let's say you have 4 million customers, right? Now you can make the Uber way. So you say they need to pay for the current account. They need to pay when they use the credit card, right? So this is direct customer monetization. But you can also say, now these 4 million customers, they're using their credit card frequently. They produce data. I do partnerships with companies that analyze the data of the consumers. And, for instance, offer tax advisory, right? And then you say, to these companies, to tax advisors, you can get access to the 4 million customers and offer and advertise with them, but you need to pay a certain fraction for it, right? Of your revenue, whatever it is. So, and that's again the B2B monetization, monetize a platform to the B2B side. And everything you see right now is enabled by APIs, right? This whole new business model engineering that's happening, this is all enabled by APIs. That's why APIs play such an important role, because they're linking certain company like kind of players together and making new business models, and you will see a couple of in a second, possible. So the interfaces make possible that data can flow, analytics can be done, and that's why the value can be generated and then shared over the price. And in the API world, there are these two important, or like 4 important trends in these 2 important dimensions. So using all the data you have from the customer and allowing you to shape certain offers much more to individual customers than before, right? So using the data means also mass customization. And also what happened is that many banks understand themselves meanwhile more as mobile phones, right? So that's why the customer experience with the bank totally changed. It's so much more important to have a good app, right? Than 10 years ago, nobody was caring about apps. Now everything's going into the app, to the web to a certain extent still. But this whole new customer experience, this is actually what every bank is now following, and many banks build customer experience departments, optimizing the customer experience from the mobile app and their sales journeys. Now, in all this API world, we still have the traditional verticals, right? So the lending of banks, the payments, the savings products, and the analytics you can do. Analytics is probably the most modern here. Lending is probably, and savings and lending is the oldest, and payments obviously in between. So in all these verticals there, we see a lot of innovation because of this data now, because of these APIs we see. And that's why when you look around and you find a lot of innovation models, and this is an overview of what is then happening, because in this innovation verticals like lending, a customer wants a loan, right? Or savings, a customer wants to invest in an ETF or in stocks. You have a lot of sub verticals, right? So inside, for instance, lending, you have buy now, pay later. The customer can directly, when he purchases something, directly use financing at the point of sale. This is one innovation there in lending, or factoring services. You can sell the claims outstanding. You have better working capital management, and so on and so on. So all these innovation that is going on, it's inside these verticals, but also across verticals, right? So that you combine lending with savings, for instance, or you combine payments with analytics. So in all these spaces, there's innovation going on. And I want to show you just now 4 examples of these verticals there, just to have that you have a certain feeling of where it can probably go and how innovative the world meanwhile got. Now, this is a lending company in India. It's the biggest peer-to-peer lending website there. So it started, well, kind of 9 years ago, and already has 600,000 customers and a team of 100 people running it. And what they do, I show you on the page. So they offering both sides, right? You can go there and say, I'm a lender, or say, I want loans, right? And this is a platform that connects then the lender to the borrower. So, right, this is again a platform idea here that, the more people come on this platform, the more attractive it gets, the more granular they can shape their products. And you see also here the steps, right? When you do borrowing or lending. So also from the customer experience, a very clean interface here. And this is just one example of an fintech here in lending. Now, the next example would be lending and savings. This is Casa Top. It's a company from Peru. And what they did is to combine actually both sides, right? So you can go there, and this is actually a B2B financing company. So you can actually do certain investments here, but already in certain industries, and then they give you a certain return, and then they package that later on as a loan, right? This is also an example of a lending now here combined with savings together. Next example of the four, the third is Kuda Bank in Nigeria, which is specialized on digital banking. And not so long ago opened, 2018. Now it has over 1.2 million customers, right? So it massively grew. And why it did? Also because to a certain extent, also because of lending, because you can easily qualify for an overdraft at Kuda Bank. So, so there's a customer complaining that he opened an account at another bank and still did not qualify for a loan on overdraft. And so this Kuda Bank, they made the overdraft kind of easier to get. And that's why probably also they have such a impressive customer base now. Now, interestingly, they price at a daily rate of 0.3%, right? But that's a daily interest rate, right? You can do the math, how high the interest rate in a month and a couple of months is when you price on a daily base for a loan, right? So this is the third, and now this is the last one, Flutterwave. It's the leading PSP in Nigeria, so specialized on SMEs there. And you know, all these companies have one in common, they massively grow. So when even they started kind of 5 years ago, they have hundreds of thousands of customers quickly, because this is the infrastructure emerging there. And this is the interface here of Flutterwave they offer to implement. So also again, you see very easily done, very clean surface, and now aggregating certain payment methods here with the card, with your smartphone, SMS, with the bank. So they offer this to merchants that, you know, you use this Flutterwave and then you have the payment facility here directly. So just some examples to inspire you. Now let's do a bit of a deeper dive in the payment space, where this is the value chain, right? So you have then, I mean, obviously the merchant that receives the payment, and then you have the customer that's doing the payment. In between, there is all these players involved. So first of all, the card issuers, like the classic names, you know, then the acquirers that actually do the transaction, that also do the processing in the background. And you have then the PSP, right? And again, this is also an interesting industry to innovate, because in these payment solutions, the more you do online, the more you can do risk scoring, you know, with interfaces, with APIs, and the more you can also innovate into buy now, pay later, for instance, right? So that's why the payment space is very closely linked to the lending space. Meanwhile, well, whenever there's a payment, there's probably also the need to lend something, right? So that's from the value chain in the payment space. And now when we do projects for payment companies, we look first of all on their product structures, right? So what is the core offering from them, and what are the modules around it, right? So for instance, bill payments and other things. So, and then once we've, you know, looked at the platform, designed the platform, then you can also ask the prices, because you can go for a transaction-based price, you can go for a percentage of the basket, you can go for a flat fee, right? So a certain, and this is exactly what our projects are about, to understand, you know, where the value sits and how we can probably optimize the pricing for it on all these different price points. So this is an example of the Turkish payment market, and you see here the existing companies, and many of them are already e-money companies, right? So that's why in the last years, many companies actually entered this market with innovative models. And then to the right, you see even more companies wanting to go in this space. and they all kind of specialize on a certain thing, right? And entering this market, then they try to be what they do best to gain customer base, and then once they have a certain amount of customers, they try to improve the pricing. So that's why we often say first get reach and then get rich. And this is just an example of Turkey. In other countries, you see similar developments. There are many, many companies entering the market with innovative ideas. As you can see here in the middle, kind of the wallet idea, right? A lot of innovation in e-commerce, bill payments, and so forth. So the speed and the the altitude is probably comparable to the graph at the beginning, right? Where at the start, intangible was small, and then 50 years later, it was absolutely dominating it. So on the other hand, this is also a tough competition, right? So many companies that you read here, in 5 years, they will be disappeared, right? So that's why it's a very vivid development, but also, not all of these companies will succeed, but they may be bought, right, by bigger players, or the idea may not be successful. However, what happens is that there's a lot of, because of this innovation, a lot of new cool things happening in the marketplace. Okay, so let's look probably at a more conservative market, the Middle East. As Alvaro said, we also do many projects in this area. We have an office in Dubai. And now when you look in this area, it's when you compare it, for instance, to Turkey or Europe or Germany, for instance, not so not so rapidly progressed, right? So for instance, in Oman, they started with a regulatory sandbox framework. And so building the bedrock, right? Establishing certain standards in the market. And Saudi Arabia, the same. So they all start with the sandbox regulation. Probably most advanced are the Emirates, because they already have, certain fintech hubs going on. But this is another example of things starting in every corner of the world, so to speak. And now in these markets, we're more probably at the beginning, whereas in Germany, this is your landscape, you see, is probably, much more advanced, right? Because it started, 10 years ago, probably, right? And it's in every vertical: payments, insurance, savings, and so on. So what we have many companies now offering their services. And when you see these crosses here, these red lines, it also means that the companies disappeared, right? So as I said, so not all companies will be successful, but many try, and sometimes they are bought, sometimes they can't just grow fast enough to make it, and the investors don't want to continue. So it's actually both there in competition, right? So just to give you a certain feeling of where the traffic goes, once you start with open banking with the APIs, all the companies kind of developing around this infrastructure then. And again, in such an area like Middle East, that's kind of, it will probably be in 5 years, it will be a similar picture like here, right? Where you have many companies in all these verticals. Now, we did some research on the Azerbaijan market, and we also found very interesting examples here in the emerging fintech landscape. So again, it's every corner of the world is underway towards APIs. And it was interesting to see that you already have many kind of companies started, or kind of some years ago even started in this space. That's why we were wondering about your own perception, right? So we brought a poll with you. So seeing all these examples, in lending, in savings, in payments, in these industry verticals, where do you think or believe Azerbaijan is currently standing? So very advanced already, 5, or at an early stage? Now there is a poll coming up. You can answer then, and please cast your vote now. I'm very curious. Okay, so Alperen is collecting. Not sure if you could reflect then or mirror back how many already participated, Alperen.
No, 20 of 46 has been.
Okay, 20 or 46. Okay, almost halfway.
Yeah, let's wait for.
Okay.
Yeah. So we can end the poll and.
Okay, very good. Yeah. So interesting distribution. So 29 say that's the biggest group, already advanced, but still in an early stage, whereas 17%, like 70% say very advanced, 25% very early stage. So they're very interestingly very different perceptions, right? How far or how fast Azerbaijan has progressed already. It may probably be also the background you have, right? From, you know, if this is probably in payments, right, which may be much more advanced than the lending space, for instance, right? So I think there's also differences in the verticals there. Okay, very interesting picture. So that tells us that you have a very different perception on the kind of API revolution in Azerbaijan. But one thing is for sure, it's underway, right? So that's that we can read from the distribution here for sure, that many things happening in Azerbaijan right now. So that's I think it's important to think of the strategy behind, right? In which areas is progressing now. I understand you have 26 banks in Azerbaijan, which is a very interesting, very vivid banking scene. Not many companies have so many banks, right? So when you look at, for instance, the UK, you have probably 3 high street banks. In Canada as well. No more than 3-4 banks or in Netherlands. In Germany, pretty much the same. We have a lot of regional banks. But they are still part of one system or 2 systems there. So I think it's a very special market because you have so many banks in Azerbaijan. And then kind of that's obviously also the question, what will it do with the banking world, right? All this API developments and new businesses starting and innovating. So that's why I think it's a very interesting discussion to have. What will be your positioning in the market and the strategic idea towards the API revolution underway. Okay, so that's that was the API revolution. Would you have any questions to that part here? Otherwise, we move on to the implication for banks, meaning open banking and what APIs enable. If you would have a question on what you have just seen, or certain questions on certain slides, please let me know. I wonder if we can see if somebody raised a hand. Yeah, here's the list. If there are no questions, I would then move on with the second chapter, which is...
we don't have any
chats
and text on chat, so you can also share your question on
yeah, exactly. So please feel free to just type in the questions we have so we can then refer to it. Otherwise, we have at the end in our wrap up. Now let's move on to the open banking part. And now again, the question is, what does it mean for the banking industry? What is happening there? So the APIs in banks, they kind of lead to 4 implications. So one is the old world, right? So you develop your products on your own. For instance, a money manager or a lending product or a certain card feature. So this is, you do it on your own. Now, the second is that you use the API and you kind of collaborate with a third party because, even in markets like Germany, many banks collaborate with, for instance, a robo-advisor because they were much faster outside, and then they use the API and do a white label. So they put the label of the bank on top and say, this is our product. However, somebody else outside developed it, right? And then that's the second here. So you use the API to link the third party inside your product portfolio as if you would have done it yourself, right? So that's kind of the OEM white label thing. The third possibility is that you understand as a bank, you understand yourself as a platform, as a market space, as we've seen with Google, right? As a market space, and different third parties can link to your platform and offer services, but these third party offers would be then clear to the customer that outside of your bank. That's the difference to two, because in two, it's a white label. It looks as if it was from you. At three, it's the platform, right? That idea that you say, there's certain providers here, you can pick and choose. What we do not want so much, obviously, is number four, that other parties from outside use the APIs to access your customer data and directly link to the customer without you. Now, unfortunately, many regulations in API lead to four, right? Because they give rights to external parties to access your customer data. You cannot inhibit this. I mean, there are certain strategies to make a price tag on or to differentiate, but at the core of many of this API regulation is more competition, meaning that the external party can access your customer data and directly communicate with the customer. Now, fortunately, in banking, it's a very conservative market. You would need the consent of the customer that you can ask the bank for access, right? So that's why, even though it's geared towards more competition, it's still protected because it's a bit of a conservative industry. Nevertheless, what we see here with API, it's moving towards the platform logic. So the whole banking industry becomes a platform industry, and the APIs open up the customer kind of data and also the customer access to a certain extent. So, and you better then use the white label and platform idea than the other parties come and gain access then to your customers without you. Now, some examples here on API platforms here. This is a Singapore bank that very easily grants access to their customer base with certain APIs. So you can, as a company, you can just go there and say, I want to make certain, kind of experiments. And then you have 150 APIs the Bank of Singapore offers you to access that data they have, and then to build business, for instance, tax advisory or lending, right? So they open really up. They open up their bank and they offer proactively many APIs. How they monetize, how they earn with this is a different question. This is a different story. And here, this is one example on how BBVA is earning with open banking. So what they do is, when you have just a sandbox, meaning you test certain things, that's for free. Now, when you access the real data, this will be limited, right? Now, and when you find this valuable, then there is a contract necessary, because when you want to use the real data unlimited, a contract is due. And this is how they monetize, right? So they invite you to try to use the real data for a certain limited time. And when you think this is good, I can develop certain things, then you need to sign a contract. And this is how they monetize. This is again the B2B side of the monetization here, right? So this is how things are monetized. And the bank in Singapore is a very similar model. So this is all how they earn with their APIs. Now, when you look at players, what does it mean now for the digital strategies of your bank? Now, here is an example of Deutsche Bank digital strategy. So they start with, at the core, a very conservative, very traditional thing. they say we are personal and digital. We are an advisory bank. So they say we're still doing advisory, and this is our personal kind of connection. However, then they come with new products and services, and then they go into more the automated robo-advisor, multi-bank aggregation, and then mobile banking, right? So all these dimensions are part of Deutsche Bank digital strategy, and building more and more towards kind of being a total digital bank. Now, from my experiences inside of these companies, it's a big struggle, right? Because usually you have the new digital banks founded inside, and then the question is, but where is the primary customer contact, right? And sometimes there's a big struggle between digital and traditional banks in order to kind of figure it out, right? How to combine the two. And I think it's also a necessary discussion to have when things are changing so fast outside of the bank, that inside, there are certain discussions going on how to deal with the whole situation. So the question again for the monetization here, when you look at Google or Microsoft, they all use, for their APIs, different price systems, right? At Google, for instance, when you want to use the maps intensely, there is a certain fee here, right? So that includes 2,500 requests. And when you go beyond this requests, there is a certain fee per request. So this is the price point based on the request. Or when you look at Microsoft, that charges based on transactions, meaning when they do text analytics, and so on and so forth, right? So this is usually the question, so how can you monetize these API calls then best? Is it a flat fee? Is it per transaction? Is it a certain kind of limitation in there? So these are all questions around monetization of API and the API industry. Now, this was geared now towards more the B2B monetization. So you as a bank go to other providers, payment companies, right? Tax advisors, and then offer, to collaborate with them. It's all B2B. Now, what is important for B2C? Now, we have three important dimensions here. First, when you develop new products, what is important, right? It's important not to do over-engineering. That would be the feature shock. It's also important to think of the value when you do innovation in new products and new features, that you do not underprice them, that you do not give something away for free that is of high value. And finally, then also the customer experience for the banking products. And now we go into these three. So when you think of how would I, in an open banking world, develop my bank products now going forward, right? So this is a kind of a counterexample of this watch, because it's overloaded with features, right? It's the MRTG from Casio. So there's so many features in there. It's probably nobody will actually use all of them, right? I mean, the most important features is obviously to have a look at the time. It shows the time, but this is so much kind of drowning here in so many features that, I mean, probably people buy it for the time primarily, but they get kind of 20, 30 features with this watch. And this is probably not the right idea to do because it's overloaded, right? And also from the market success, it wasn't so big, because that's one mistake to make, is a feature shock. So to pack too many things inside, and then it's not easy enough for the customer. Now, another example how to make it better is Swatch. Now, Swatch owns Omega, which is a very traditional watch manufacturer. You may all know James Bond, that, in the recent years, that has this Omega watches. Now, there is a certain watch from Omega, it's called the Moon Watch. It was the first watch out of space. It traveled to the moon. It's from 1960s. And now good examples you can buy for kind of 7,000 euros plus. Now, what Omega did is they now launched a moon swatch, right? So it looks pretty much like the same from the design. And but the price of this swatch is only $200 or 200 euros. Right, so rather cheap, but using the same design. Now we can imagine what happened in front of the stores when it was launched. There were people kind of actually camping in front of the store to get one of these moon swatches, even though it's not limited. So when you just wait, at some point in time you will get one because Swatch did not limit it. But apparently what they did is they set the price wrong. Right? It's also a bit of a hidden gem here because there was so many people interested in this watch that they could probably use the price tag of 500 and they would have still the same demand, right? So that's why they did the design right, very simple, only use the history, right? But then the pricing was too low. Now, this is the third example. This is the first digital watch. It's from 1972. It's called Pulsar. And James Bond also wore it here for sure in this movie. And it just shows the time. When you press this button here, it shows the time. It doesn't do anything else. So it's quite opposite of the heavy loaded watch we see at the start. Now, Hamilton, who owns the rights, launched a remake of this model, and that was quite expensive. It was a kind of 500 euros or even more. And it's also sold out, right? So apparently there's a lot of remake going on in the consulting industry, in the watch industry here. But however, what is important there is that they really kind of cut it down to one feature, and that is then kind of a success. And when you look at prices and value, also for bank products, the question is, how do you price the right way, right? So all these new features in open banking coming up. So how do we price, for instance, a remote deposit capture? We have a check in front of you, you make a picture of the check is processed automatically. You know, just one idea here, or you have a certain analytical product that you analyze the consumer's transactions and tell him, you know, you would have at the end of the, like mid of the month, you still have X of your money left, right? So just to play back financial information. So how do you price for that? And here is an example of the water. So all these glasses of water, they have different prices. So to the left, it's just 1 euro cent. To the right is 4.5 euros almost. So the question is why? It's still water. Why is such a different price here? And the answer is because there is a different value involved, right? The water for just 1 cent comes from the tap, which is for free, or it's not very expensive. So that's why the water here in this example costs only 1 cent. Now, once you package that water in a bottle that you can transport it, you can charge a certain price for it. That's why it's way above the tap water, because it has the functionality of you can carry it. Now, adding a certain brand like Peru from France increases the price again, meaning that now you add the bottle plus the brand, plus it tastes probably also better. And that's more value that you can monetize, that you can charge the price. And finally, unbelievable, but it's a commodity product, water, right? But still, Force is charging 4.52 euros, meaning kind of more than double this established brand here. Why? Because they add the feature of lifestyle to it. The shape of the bottle is looking nice. You can use it as a decoration. So that's why the same water probably can have very different price because the value is so different. And that's why it's so important to understand the value before you make prices, right? Because different value components lead inevitably to different pricing opportunities. And the old Romans already knew this because there is in Latin language, there is a word for price, pretium, and there's also a word for value, which is pretium, meaning it's the same word. It's the same thing. When you know the value, you can determine the price. And that's important for the digital price models, because there you can very quickly test, right? If customers react very positive to it, how many would probably appeal, and set the price when you measure the value, right? So this is one thing. Now, the next thing is how many of the new products should you offer? Banks tend to have many products on the shelf, but when you look closer, consumers have often only one or two products of a bank. So not so many that is offered. Now, one example or experiment here. So there is a supermarket A that has 24 marmalades on the shelf, pretty impressive selection. And there's a supermarket B that has only 6 of them. Now, when you do tests in the store, 60% of the people stop at store A and look at the marmalades because it looks so attractive. So they stop, 60% stop and have a look. Now in the supermarket with only 6 choices, only 40% stop because it's not so impressive. It's not so many choices there. What is better now, right? The 60% you would say, okay, on the first side, probably that because so many people are stopping, 20% more are stopping. Is that good? Not necessarily, because when you look later, how many actually bought, it's the opposite. So at supermarket A, only 3% bought, effectively of the 60%, effectively 1.8%. Of the supermarket B, 30% of the 40% bought, makes it 12%. So very interesting, right? So because choice at first is impressive, but when you have to make a decision, it's getting complicated. And that's why you be turned off. So the ambiguity of group A is much higher than group B, right? So the cost to choose, the cost to make a decision, the stress to make a decision is much higher with A than with B, which is simpler, which is easier, right, to make a decision. That's why a bigger selection of products and features is not always a good idea, right? It's also important when you think consumer markets, right? B2B is another story because in B2B negotiation, it's better to be complicated, to have bargaining chips, right? However, in the consumer space, that's why it's important to be simple enough for the consumers that they can make their own self-selection, their own decisions. And that's getting more and more important in the digital world because there is less and less of an advisor. The customer has the screen, has the mobile phone, making his own decisions. You can give him certain nudges there or recommendations, but it's more and more self-selection. And that's why it's important to get that thing right. Here, from the bank, then what we often see is that there are many products available, right? So 150, over 150, I mean, look at the average number of used bank products, it's often close to 2. The current account, the mortgage only, right? But no other products then, right? And that's why we also got questioned, and so should I remove all these other products? How can I deepen the relationships, right? So, and the trick is here to be simple. This is one example of our house bank kind of design, that you kind of use the bank products and put them in these need buckets. And then you reward the usage in every bucket, assigning certain stars to it so that the consumer can actually also earn money with the current account. Right? When he or she uses an insurance or a brokerage account, the current account is for free. The current account will even give you money, right? So it's making things simple. So this one point we had, so coming from this very complicated watch, right, overloaded, and then you see the most simple versions of it, just concentrating on history or concentrating on design much better market impact, right? So same in banking, right? All this kind of open banking leads to a lot of products, a lot of innovation. How can you simplify it? How can you make decisions most easy for the consumer? So that's the first thing. Now the second was the hidden gem. So for instance, here IBC, some years ago, they've developed a remote deposit capture app. So there are a lot of checks circulating in Canada and United States. Why? Because in these countries, you do not have an interbank transfer system. It's really kind of interesting, as if, you know, it would be really medieval times there. They never developed a system where you easily can transfer money from one bank to the other. So intrabank payments are not easy in the United States and Canada. That's why so many people use paper, the checks they sign, right? And then the check is deposited at the bank you get it from. Now, CIBC innovated in that space and made depositing a check very simple. Just make a picture with the app and send it. Now, with these features, they've processed, when this app started, they've processed millions of checks. And they didn't charge anything for it, right? And this is a hidden gem because it's making things so much more simple. They already could have charged a lot for this feature and app. They didn't. Hidden gem. And there are other examples. For instance, here the payment space in Europe. Now there is a feature. It's called instant payments in Europe. Instant SEPA payments. So when you make a transfer from one account to the next account at any bank in Europe, you have the possibility to do this in seconds, right? So meanwhile, European standard SEPA instant payment, maximum 15,000 euros. You can do it even on the weekend, right? And everywhere in the SEPA zone, you can use this feature. Now, this is also a kind of API-driven thing heavily, and open banking enabling feature. However, the banks, they can monetize this feature as they like. They can say, this is for free. We do not charge our customers using this instant payment. Or they can say, we take a certain amount per transaction. For instance, Deutsche Bank, where I'm a customer, they have 60 cents per transaction. Or they can say we take a certain percent of the value transferred. And this is again a hidden gem and a missed opportunity, because many customers have a very high willingness to pay for instant transfer, instant money transfer. Usually when you would have time for payment, why should you use fast transfer? It can be there 2-3 days. No problem. But when you ordered something and you want that it's shipped quickly, then you need to do instant payment. And that's why it's of high value. And that's why the banks could much more monetize with that feature. They would be free, but they totally neglected. They were surprised by the number of customers using this transfer mechanism. And then it was too late, right? Because there's only one point in time to set the price, and this is at the beginning. And there you have the chance to set the price right. Otherwise, the price is pretty much established. The consumers are using it, and you can obviously then increase it a bit, but you're pretty much rooted in the metric you use and the level you have. So another example of a hidden gem. So when you now innovate in Azerbaijan certain payment methods or features there, that's why it's so important to ask, what is the value to the customers? Is it simple enough? And then how can I monetize, right? That you do not run into this trap of generating value for the customer and then not sharing this value enough over the price. With the customers, again, companies in Canada, many banks in Europe, they neglected or they didn't see that potential and they didn't monetize it. Now, another example here of hidden gem is the charge system in Austria. So it's using the customer's data, the own data of the customer, and monetizing it, right? So here's the 7 years archive, for instance. This is when you look into your account history or the payments you did. in the last 7 years, you can access with this app, with this pocket product. Now, because many banks, they shut down at 3 months or 6 months, you cannot see the transaction history anymore. Now, that's a smart move here because you would have the data already. The data would be there. Now, you make a product out of it, right? What you have already, meaning the transaction history of an account. And many customers, when they do their tax, right, they would sometimes need to look back more than 1 year into the account history. Now, when they didn't save it or didn't receive the statements, they can't. That's why they would probably have a very high willingness to pay for such an account history. And other features as well that you see here, right, with certain, insurances and information services. And the Erste Group, they monetize very modestly, right? Not only €1 per month. That's why it's also hidden gem. The most prominent feature is the semi-archive, but it's monetized not enough, right? So they programmed something, they invented something great, not enough monetization for it, right? This is just another example. Now, for the third dimension, the customer experience, it's important to understand that bank products are, can use very differently. Because when you look at a current account, you have a lot of interaction. When you look at a mortgage, other extreme, you almost have no interaction. It's, you just pay per month the rates and that's it. There is no interaction. With a current account, you do payments, you look into your account all the time. So there's a lot of interaction with the bank going on. This is the first important dimension when you design bank products in an open banking world. So how high is the interaction? The second dimension is the involvement. You could probably also say how much is the customer concerned. And there it's the opposite, because with a mortgage, it's pretty high involvement as it's a very big amount, right? When you lend a multiple of your income, you are concerned. And that's why it's a very high involvement. Whereas the current account, okay, it's just there to work, right? It's not so special. Unless there is some critical incident, it's a pretty low involvement product. And the other products you see here, the brokerage, investments, the consumer loan are somewhere in the middle or in between these two extremes of low and high interaction, low and high involvement. And knowing that, you can then design accordingly, right? Because customer experience for current accounts is way more important than for the mortgage. For the mortgage is also very important, but only when it's sold, right? So making the selling experience in mortgage great is the most important thing, whereas for the current account is the daily usage experience, right? So very different angles here when you think of optimizing in the digital space, in the open banking world, these different bank products there. Now, another example here from olive oil, just to show you some effects. When we talk about involvement and interaction, there are also psychological effects of choice. Now, there are two bottles here, right? One from Croatia, olive oil for 5 manat, and one from Spain, Andalusia for 9 manat. So the one from Spain is more expensive. So when you would have such a olive oil choice to make, which one would you choose? Hopefully you have the poll ready. So we can probably answer that one.
So shall we make a poll or?
Yeah, let's do a poll. Yeah. So which one would you choose when you walk into the store to make a decision when you see these 2 bottles of olive oil? Which one will it be?
Maybe we can have this question from chat, just
okay.
1 or 2.
Oh, there are chat questions. Okay, I don't see them. Yeah, so I guess you don't have the poll, right? So
no, yeah.
No worries. Okay, so I explain how it works. So now with those two, there's a certain distribution, right? So it depends now on your, kind of preference. Would you probably, be not willing to pay 9 manat for an olive oil, even though it's from Spain? Would you prefer the Croatian one? So in consumer markets, many people actually buy the 5 manat olive oil because it's fine for them, right? Croatia is also good. So it doesn't need to be the 9 manat thing. Now that's one distribution. Now, when you look at that one, what happens is here we add a third product for 19 manat from Italy, Tuscany. So the area sounds much more prestigious. It probably also tastes better. And this is for 19 manat, right? So now the question would be again, which one would you choose? And when you do the experiment, you can imagine a certain things changing now, right? Just adding a third product to the right, because the distribution before in many experiments is 80% buying the cheaper one, 20% buying the more expensive one. And when you then move on and add this third product to the right, distribution shifts to the middle, right? So 50% are by the middle, even though it's the same prices, it's the same products, nothing has changed. However, the portfolio has changed. Now you have a price anchor to the right, and you have a kind of a price value angle here. That's why it's dragging the demand into the middle. That's why it's, kind of changing the perception. And this is just one example of how, kind of product design in retail bank also should work. That, think of psychological effects like this, making simple choices still, right? But using these effects, these insights there. That there is a certain tendency to the middle, that there is a certain anchor effect. Here, for mortgage, for instance, there are 3 solutions, right? It's not only one. Because when you offer only one, you may have a hard time when the consumer says, but I want it cheaper. That's why, in the middle, you have the standard mortgage, and only when the consumer says, I want it cheaper, then you can go down to reduce the interest rate a bit. However, then you also decrease the value, right? So certain features here get less. So, and then you say, for only $24 per month, you sacrifice all this value here, right? So you get much worse product. Are you really willing only for $24? So that's why you defend the downselling. And on the other hand, you can also upsell. You can say, oh, our mortgage has many more advantages here when it's a premium mortgage. For only $40 more, you get all this additional flexibility, right? So this is in open banking a recent thing that many features are added at the beginning. We had it already, and then it's how we package these, how we use it in price value negotiations, right? Obviously, the way that we inhibit downselling and try upselling. This is another example how you can transfer these things to the banking industry, or here investments, right? So you have the basic product with a lower fee and one free trade, and you have the fully fledged product for a higher fee and a lower trade per trade price. So these are 2 price points, right? The monthly fee and the per trade, and then you can optimize them. And then again, here's 3 products that are for self-selection, right? And then for the customer that says, I'm trading a lot, or I do not trade so much. Here's another example, how to make use of that. Now, what do they have together? That they all, meanwhile, all work with MVPs, minimum viable products. So the banks, give a first try, give a first shot with a minimum viable product, meaning a product that is good enough that it can be sold to customers, but it doesn't need to be perfect. It doesn't need to be elaborated. It's only the minimum solution. And that's then quickly brought to the market so that you can have experience with this product. And that having experience with the product then improves the possibilities to develop it further, right? So, years ago, banks, they were, for like kind of 1 or 2 years testing and testing. but only theoretically before they launch something. Now it's more launch it fast, but with minimum viable solution, and then, you know, gaining experiences. And this is because time in the background, the time is so crazy, right? As you see in the Turkish market, kind of 50 companies already knocking at the door with licenses for payments, for instance, having all MVPs, right? That's why when you have a certain customer base that is satisfied, then the question is, in a couple of years' time, when they are approached by all these companies, would they still be satisfied with the solution we have currently? Or would you need also to, you know, find out what solutions would you need to add or innovate? And this is, from our experience, best with an MVP to quickly, you know, kind of going into test mode. And also for your IT, because, you know, MVP means that you start with a certain initial solution, and then you frequently add certain features to it consecutively. So that's why it also can be launched much quicker. This is a project example here, that you do not need to develop it to the maximum at the beginning, but more the minimum or the opposite. And in these projects of open banking development and product development, we support all the, I can bring all the departments together. So IT, marketing, product management, sales, finance, and then UX experts to develop these products and develop this pricing. Meanwhile, also pricing, when you make pricing systems more granular, right? So the interest rates for a loan, for instance, then it's almost the same thing because you need IT so much for the pricing system. And also you need to talk to sales, how they react to it, right? So this is the usual setup, working with the experts of the bank to develop the new products. Good, I think that was the content we brought, kind of as a flight through the API revolution that enables all these new business models, that opens the data of the banks. Once the regulator is forcing banks to offer APIs, then this whole industry is kind of rapidly growing. And in some countries, yeah, I mean, we've seen a tremendous development of that one and many, many new companies emerging. And for then the banks, then the implication is that open banking will be the future, meaning that much more data driven, much more customer experience driven than before. Okay, so that was kind of so far what we wanted to say. Now we have kind of 8 minutes as a wrap up. So would you have questions to what you've seen so far? Were there certain elements that were especially interesting for you? Or was there something that did concern you or that makes you happy or optimistic or the opposite? Any questions? The chat window is there. You can type in anything you like. So let's wait then. You can also raise the hand and to a verbal question if you would have one. Okay, so I don't see questions yet. Maybe there are none. Yunus, you wanna have some words, closing words then probably, or okay, good. So then I think let me screen share again here. So I think then we are through with our seminar, and I hope it was inspiring for you in showing you a bit, you know, a kind of global perspective in API development. So we brought many examples, not only from payments, but you know, in payments, it's pretty much the same than in retail banking, it's all these PSPs, the payment service providers, that use innovative payment and lending methods in e-commerce, first and foremost, like Flutterwave, for instance. And then the question is, how do the bank now relate to the PSPs in the market, right? On the other hand, also the question, how do the banks now react to the open banking possibilities and the new competition that is coming up? And how it was inspiring for you to see what competition is probably coming up in the future and what verticals are important now to discuss. And as usual, in every change, there is, it may be a bit frightening, but there is a lot of opportunity as well, to shape certain things, to make things new, to make for the consumer, a much greater experience, and have fun with development, changing certain things, right? Things that you wanted to do since years, and now they're technologically possible, right? So, anyway, if you have any questions, please let us know through our contact. Otherwise, I think then we are through with our seminar.
So maybe I can add a couple words, Benjamin. So have any, we are going to be collaborating with Unispace in the future. Also, we will be participating into FinTech Summit. Maybe Benjamin, we can mention.
Yeah, that's right.
So we will be having also some seminars regarding also digital banking and so on. So if you want to, discuss further, you can directly contact with us, or through Aytacan or Yunus Bey, you can always contact and discuss further these topics or general banking topics, or digital and so on. So thank you all for the participation. Thank you for your time. Aytacan, do you have any words to say further?
Thank you for presentation.
Okay, thank you very much then.
Thanks.
Teşekkürler, sağ olun.